In this video, I'll share with you 10 stocks that I bought in April 2024. If you're new to my channel, I work as a finance manager at a top tech company with an MBA in finance and a CPA designation. Starting from March 2024, I'm investing $2,000 of my own money each month into stocks. $1,000 of it gets invested into growth and value stocks, and another $1,000 gets invested into dividend stocks. So in April 2024, I ended up investing in 5 value and growth stocks and 5 dividend stocks. Without any further ado, let's start with the growth and value stocks first and go over them one by one. Stock number 1, Apple. Apple is a multinational technology company known for designing, manufacturing, and selling consumer electronics, software, and services. Its iconic products include but are not limited to the iPhone, iPad, MacBook, Apple Watch, and AirPods. At the time of this video, Apple is valued at $2.6 trillion. I bought 2 shares of the Apple stock at $169.98 for a total investment of $339.96. From my previous month, I've already owned 1 share of the Apple stock at $179.67. Because the Apple stock continued to go down in price since my initial investment, I decided to buy 2 additional shares at a lower price to lower my average cost per share. So as of now, I own 3 shares of the Apple stock at $173.21 per share. For me personally, Apple is one of the safest and most promising companies to invest in today. What I like about Apple is that they don't rely on the success of a single product for a majority of their sales. They have numerous products that are all successful on their own. As I myself own multiple different products from Apple and I'm satisfied as their customer, this makes me more willing to become a long-term investor in the company as well. Stock number 2, Costco. Costco is a membership-based warehouse club that offers a wide range of products that you can buy in bulk at discounted prices, including groceries, electronics, clothing, and more. They have around 900 warehouses and 130 million membership card holders. At the time of this video, Costco is valued at $315 billion. I bought 1/4 of a Costco share at $721.16 for a total investment of $180.29. There are 2 main reasons for why I decided to invest in Costco. First, my family and I have been Costco members for over a decade now, and we've been satisfied with our experience with the company so far. If I'm a satisfied customer, this makes me more willing to invest in the company as well. Second reason is that the company's annual revenues have been rising consistently each year, which is one of the most important indicators for me about the company's growth and potential. So these 2 reasons made me want to add Costco into my growth and value stock portfolio. Stock number 3, Tesla. Tesla is an innovative American company specializing in electric cars, renewable energy solutions, and advanced technology. Tesla CEO Elon Musk is widely recognized as one of the most influential figures in the tech industry. At the time of this video, Tesla is valued at $461 billion. I bought 1 share of the Tesla stock at $172.44. Tesla is one of those companies whose stock price can go up or down in value by a lot over a short term. So as of now, I'm losing quite a bit of money since my investment a couple of weeks ago. But I invested in Tesla for its long-term potential with the full understanding and expectation that the stock price could go down in value over the short term. Specifically, the company is planning to improve the car manufacturing process, making it more effective and efficient to produce new cars in the future. Tesla is promising to create a $25,000 car by 2025, and if they accomplish it, I think their stock price will grow by a lot. So despite any short-term losses, I want to keep Tesla for a long term just to see if the company will be able to deliver on these promises. Stock number 4, Chewy. Chewy is an online retailer specializing in pet products, offering a wide range of items including food, toys, and medications for pets. Chewy became popular because of its convenient subscription services, fast delivery, and customer-focused approach. At the time of this video, Chewy is valued at $7 billion. I bought 11 shares of the Chewy stock at $15.97 per share, with a total investment of $175.67. So back in March of this year, I actually invested in 12 shares of the Chewy stock at $17.64 per share. And because the Chewy stock continued to go down in price since my initial investment, I decided to buy more shares at the lower price to lower my average cost per share. So as of now, I own 23 shares of the Chewy stock at $16.84 per share. I like Chewy as a company because they have one of the best customer services that I've ever seen. Whenever customers want to return something to Chewy and mention that their pets passed away so they no longer need the item, the company goes above and beyond by also sending gifts and flowers to the owner of the pet. Also, the company refunds you all the money that you spent on the products and asks you to donate the products to a local pet shelter instead of returning it to them. So I think this customer-centric approach makes Chewy a high potential company and helps them turn regular customers into loyal shoppers. Stock number 5, Unilever. Unilever is a multinational consumer goods company headquartered in London. It owns a vast portfolio of brands including Dove, Lipton, Ben & Jerry's and Axe. At the time of this video, Unilever is valued at $118 billion. I bought 3 shares of the Unilever stock at $49.66 for a total investment of $148.98. When looking at the company's lower stock price and market cap and comparing it with relatively stable annual revenues, I thought that Unilever stock has a potential for future growth. Unilever also owns some of the world's most famous products and brands which are relatively safe from economic downturns. The company also has a huge dividend yield of 3.8%, which means that they'll pay me $3.80 for every $100 I have invested in their stock. So I could have invested in Unilever as part of my separate dividend stock portfolio, but in this case I thought that the stock price also has room for growth, which is why I decided to add it to my growth and value stock portfolio. So these were 5 growth and value stocks that I decided to invest $1,000 in the month of April 2024. And now let's go through my 5 dividend stocks that I spent $1,000 this month. Stock number 6, Coca-Cola. Coca-Cola is a multinational beverage corporation known for its iconic soft drink Coca-Cola. Beyond its flagship brand, the company owns a diverse portfolio of other beverages including Sprite, Fanta, and others. At the time of this video, Coca-Cola is valued at $260 billion. I bought 3 shares of the Coca-Cola stock at $60.80 per share with a total investment of $182.40. Coca-Cola has a dividend yield of 3.2%, which means that they'll pay me $3.20 each year for every $100 I have invested in their stock. I have a couple of different reasons for investing in Coca-Cola. First, I've always heard about Warren Buffett's admiration for the company and how he's a huge investor making a lot of money from the dividends each year. My second reason is that I personally like their products, including Coca-Cola itself, and a few other products from their vast portfolio. My third reason is that the company's annual revenues have been increasing over the past 4 years, which is a good sign to me about the company's current growth and future potential. And lastly, I invested in the shares of PepsiCo last month, so it kind of made sense to also invest in their biggest competitor, Coca-Cola, as a sort of hedge. Stock number 7, Johnson & Johnson. Johnson & Johnson is a multinational corporation known for its wide range of consumer health products, pharmaceuticals, and medical devices. Their portfolio includes iconic brands such as Band-Aid, Neutrogena, Listerine, Tylenol, and Johnson's Baby products. At the time of this video, Johnson & Johnson is valued at $356 billion. I bought 1 share of the Johnson & Johnson stock at $157.75. Johnson & Johnson has a dividend yield of 3%, which means that the company will pay me $3 each year for every $100 I have invested in their stock. Johnson & Johnson is one of the safest companies to invest in. The company operates in multiple different industries, has a diverse portfolio of products and brands, has a strong global presence, and also has seen revenue increases in the last couple of years. It's always a good idea to invest in safe companies with low potential for failure, especially when trying to build a dividend stock portfolio. Stock number 8, ADP. ADP, or Automatic Data Processing, is a leading provider of HR management software and services. Their offerings include payroll processing, benefits administration, talent management, and human capital management solutions. At the time of this video, ADP is valued at $100 billion. I bought 1 share of the ADP stock at $245.06. ADP has a dividend yield of 2.2%, which means that they'll pay me $2.20 for every $100 I have invested in their stock. I invested in ADP mostly because of personal reasons. I've noticed that for every internship and job that I've had with large billion-dollar companies, my paychecks were always coming from a company called ADP. So ADP as a company must be doing so well to have all these large companies as its clients. So I decided to do some research on ADP and realized that the company has a strong market share compared to its competitors, and it has seen consistent revenue increases over the past 10 years, surpassing $18 billion in 2023. So I decided to add ADP into my dividend stock portfolio, even though I myself may not be their direct customer. Stock number 9, Tyson Foods. Tyson Foods is one of the world's largest food companies, specializing in the production and distribution of meat products. Tyson Foods has a diverse portfolio consisting of many different brands. At the time of this video, Tyson Foods is valued at $21 billion. I bought 4 shares of the Tyson Foods stock at $57.98, with a total investment of $231.92. Tyson Foods has a dividend yield of 3.4%, which means that they'll pay me $3.40 for every $100 I have in their stock. When I was looking at all the stocks in my dividend stock portfolio, I realized that I don't have much exposure to food companies yet. A dividend stock portfolio mostly needs to consist of safe and recession-proof companies. Food companies remain relatively stable even during economic downturns because everyone will still need to eat. Tyson Foods is one of the biggest and most well-known companies in the food industry, with a diverse portfolio of products and brands. Since the company pays 3.4% in annual dividends, it became a no-brainer for me to add Tyson Foods into my dividend stock portfolio. Stock number 10, 3M Corporation. Officially known as Minnesota Mining and Manufacturing Company, 3M is a multinational conglomerate manufacturing a broad range of consumer and industrial goods. Some of its well-known brands include Scotch, Post-it, and others, which combined consist of more than 60,000 different products. At the time of this video, 3M Corporation is valued at $51 billion. I bought 2 shares of their stock at $93.33, with a total investment of $186.66. The company has a massive dividend yield of 6.5%, which means that they'll pay me $6.50 each year for every $100 I keep in their stocks. Similar to food companies, many of the 3M's offerings are essential items that will remain in relatively stable demand even during economic uncertainties. For example, Scotch tape and Post-it notes will remain as essential office supplies even during economic downturns. Also, the company in general is recognized for their innovation, high quality, and reliability. With a diverse range of more than 60,000 products while also paying 6.5% in annual dividends, I believe 3M is a strong addition to my dividend stock portfolio. So to conclude, in the month of April 2024, I invested a total of $2,021.13 across 10 different companies. Let me know in the comments which companies you invested in this month, and if you like or dislike any of the companies that I shared in this video. Thank you for watching this video, and I'll see you in the next one.